It's not about picking stocks. It's about picking the right portfolio.
So, a couple data points that I thought were interesting. Some of these we've talked about before, but buy now, pay later over the Cyber Monday period. Up, up 43% year over year, right? And it's really more focused on larger purchases. But another example of the consumer really being stretched. Then households delinquent on their credit card bills more than 90 days in Q3 hit the highest level since 2011. So this goes to a question we're being asked from Anthony. Good morning, team and coach. Credit card companies continue to hire every day, yet are arguably ground zero. COF, for instance, what am I missing? Thank you, huge fan since CNBC 2007. And you also talked on the call about looking to potentially short credit card companies.
Yep.
But I think you also had a different thought that you were about to talk about.
Well, no. I think, so for example, like something like Affirm.
Yeah.
That's a BNPL play that the analyst is bearish on, but my signal is bullish. So again, it wouldn't be much because the thing completely collapsed. It was down 80 or 90%. So again, to go bullish trade and trend with these dynamics of the short squeeze inside of the machine. Again, yesterday it's sell all hedge fund longs, buy all their shorts. So that signal got that right. But taking this back, like fundamentally, why is a firm giving? They have no choice but to take on more credit risk, right? And if you don't have any money, and somebody gives you credit, what are you going to do? We'll show you some charts on that. People have been begging for more cards, and they've been rejected. Something like Capital One, yeah, it's gone straight up for a couple days, but that's not the trend. If you look at Capital One over the course of the full investing cycle position that we've had, what that question really does is brings you back to this, right? You can sit there and say, my God, I'm fundamentally right, and this thing keeps going up. Guess what you sound like? Every single hedge fund manager who's about to get ejected from their seat. But if we go back to Capital One, okay? This thing, okay, I'll give you a wild guess. When did it peak? 2021, when the rate of change of U.S. consumer peaked in terms of consumption growth. The November consumption PCE growth was like 7.6%. You know that number. You guys got slide 18 ready for them? If they don't, not a magic trick. It's in my mind. Brilliant. Imagine that. I can remember slide numbers. What does that say? 7.6? That'd be a real bummer if I got that wrong. No, see that? 7.6. There it is, right at the top. So right before that, this stock called Capital One goes to $170 a share. Okay. That was the peak, okay? Then it goes to $84 a share during, again, remember the regional banking crisis of 2023? That's when Capital One went to $84. That's a pretty good full investing cycle short. Now, what's the guy's name?
Anthony.
So how many times, Anthony, do you need to do this stance? It goes from, let's call it mid-80s, to 115 to 120. Goes like this. How many times did it do that? It just did it again. You're like, well, why is it not go down? Like, well, why did it go up here? Why did it go up here? Why did it go up here? Well, it's because that's what stocks do after they go from 170 to 84. All right? If you are feeling what I just sounded like on these moves here, why is it? Like if you look like that, if I could look at you, I know some of you do. I could see it on Twitter. I could see it. I could feel it. I feel the community. I'm part of the community. I lead the bloody community, right? If that's how you are, every time Capital One has gone here, you're going to be short for this game.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.